Amazon just raised its 2026 CapEx to $220 billion and blamed the price of memory. 4 more stories moving the AI tape today. Let's get into it. AWS revenue came in at $42.23 billion, up 37% year over year against a 31% consensus. That is the fastest AWS expansion since 2021 and the 5th straight quarter of acceleration. Total company revenue crossed $200 billion in a single quarter for the first time, and the stock jumped 9 to 10% after hours. But the number that reprices the entire semiconductor complex is the CapEx raise, from about $200 billion to $220 billion. And Andy Jassy's stated reason: the higher cost of memory. That is the first time a hyperscaler has pinned a $20 billion spending increase on DRAM inflation. The bear case. That extra $20 billion buys no additional compute. It is pure input cost pass-through, which means cloud buyers and memory suppliers are now opposite sides of the same trade. Watch NVIDIA on August 26th. If hyperscaler CapEx keeps climbing on memory rather than accelerators, NVIDIA's share of that wallet shrinks even as the headline number grows. Apple delivered a record June quarter, and the market sold it anyway. Earnings per share of $2.02 beat the $1.89 consensus, up 29%, on revenue of $109.4 billion. iPhone rose 22%, Mac 29%. The stock still fell roughly 7%, from $333 down to about $311. The reason sits in the guide. Fiscal Q4 revenue growth of 9 to 11% against a street looking for 12.1, with management citing supply constraints, the polite phrase for the very same memory and component squeeze that just cost Amazon $20 billion. The bear case is that the safe AI-adjacent trade isn't insulated at all. Not building data centers protects you from CapEx, not from the bill of materials. And services growth is decelerating with China coming in light. The next read is the FQ4 print. If Apple lands at the low end of 9%, the premium it earned as most valuable company 4 days ago comes under real pressure. The AI trade got its confidence back in a single session. The NASDAQ composite closed up 2.8% at 25,122. The S&P 500 up 1.66% at 7,437. Leadership came from exactly the names that broke hardest. Micron and SanDisk each rose more than 9%. That closes out a July that included a Kospi circuit breaker, a Chinese memory panic, an 1,100-point Dow rout, and a Fed that held with 3 dissents. JP Morgan's read is that the forced deleveraging is largely finished. Hedge funds have likely completed dumping tech, chip and memory exposure, which removes the mechanical seller behind last week's violence. The bear case. Exhausted sellers are not the same thing as new buyers. Core PCE is still 3.3%. And futures price a 63% chance of a September hike, the Fed's first in 3 years. If those odds push above 70%, this rebound gets tested fast. OpenAI cut GPT-5.6 API pricing across the line. The small Luna model drops 80% to 20 cents per million input tokens and $1.20 on output. Mid-range Terra falls 20% to $2 and $12. Flagship Sol pricing holds, but gains a fast mode running up to 2.5 times quicker at double the price. OpenAI attributes the cut to inference efficiency it is passing through. The timing says otherwise, landing 1 week after KIMI K3's 2.8 trillion parameter open weights went free. Read this against Amazon's memory-driven CapEx race, and you get the sharpest tension in the sector. The cost of serving a token is falling faster than the cost of the hardware serving it is rising. The bear case. That is margin compression dressed as generosity, and it just dropped the price floor under every specialized inference startup, including Fireworks at a $17.5 billion valuation. Watch whether Anthropic or Google match within 30 days. If they do, this is a price war, not an efficiency dividend. Google DeepMind shipped Gemini Robotics 2, the first Gemini model that drives an entire humanoid body, legs, torso, arms, and multi-finger hands, from a single learned policy, extending last year's upper body-only system all the way down. The demos are deliberately mundane. Walk to a shelf, crouch, place a watering can, unscrew a light bulb at a 92% success rate. Named partners include APPTRONIK'S, Apollo 2, Franka, and Agile Robots, with Boston Dynamics in the technical credits. The strategic read is that Google is converting a model lead into a second platform beachhead. The embodied reasoning variant is already callable by anyone with a Gemini API key, and that is precisely how Android-style ecosystem lock-in starts. The bear case. Demos are not deployments. The VLA and on-device variants remain gated to roughly 100 trusted testers, and this line generates essentially zero revenue today. The signal to watch is commercial shipment. If APPTRONIK puts Apollo 2 into a paying customer's warehouse running Gemini, robotics stops being a research line item and becomes a revenue one. The through line today: demand for AI is no longer the question. The cost of serving it is. Token prices are collapsing while memory prices climb, and every CapEx guide from here is a bet on which curve wins. Subscribe for tomorrow's briefing. This has been the Daily Alpha.